The clock is ticking. The deadline to file your taxes is just over 2 weeks away.
When it comes to the IRS, the only thing people dread more than paying the taxes is facing an audit. Chris McKinnon takes a closer look tonight at the red flags to avoid to stay under the IRS radar.
There's something about these three little letters that can strike fear into the hearts of even the most law-abiding taxpayers. IRS.
Yes, many people have a lot of anxiety about that.
It's a drag.
We all have to pay taxes, but it turns out we have some control when it comes to avoiding an audit.
Sometimes people will apply for benefits or credits that they're not necessarily entitled to.
That's red flag number one. Applying for tax credits on things like continuing education, retirement contributions, or those new solar panels without the papers to back it up could draw the attention of auditors.
You also want to be careful of your allowable deductions. Make sure you don't include all kinds of deductions that don't make sense for your profession.
So don't deduct winter coats if you have a desk job, or write off the cell phone that your company pays for. If you have a hobby that brings in some cash, like selling stuff online or photography, that income must be reported. But watch out how much you write off as a loss.
Especially if these filers also have a lot of other income from other sources.
Other ways to get yourself audited: failing to report all your taxable income, big deductions for business meals, travel, and entertainment. And while it's good to give, if your donations to charity are above average, you could be hearing from the IRS.
If you're in an income level and you're taking your charitable deductions are disproportionately high compared to others in that income level, then your return is more likely to be flagged.
Speaking of income, the more you make, the more likely the IRS could come calling. Once you begin claiming over $200,000, your chance of an audit starts to rise. Chris McKinnon, WBZ News.